Hello everyone, and welcome to the Swing Trading Stock Market Outlook. We are heading into the week of February 6th. Each week I go through the same process of checking out overall market health. I look at these factors, how the indices are performing, market health indicators, recent watch list and trade list performance, and sector performance. That's basically the first step in my swing trading process, which is just deciding, are market conditions even good to be taking individual trades? Right now, they are very good. Trades have been working very well. So I'm going to continue to add long positions this week, assuming conditions stay favorable, which we'll be discussing, and I can find setups I like. That has not been an issue lately. Here are the watch lists. There's the best swing trading watch list. This was actually updated very recently, so this should be for February. And the watch list is updated weekly, so the last watch list will still have some stocks on it, and then it will be updated early in the week. How are the indices doing? Well, they're all doing really good. We have strong uptrends recently, pretty much for all of 2023, and you can see we have made higher swing highs in the indices. The NASDAQ was the laggard, and it has blown higher through these prior swing highs in late 2022. Same with the NYSE composite, same with the Russell 2000, same with the S&P 500. What does that tell us? Wide market participation. The NYSE is probably our broadest measure of stocks. It's all the stocks listed on the NYSE, but diverse sizes of companies, diverse industries, and so this pretty much tells us what the average stock is doing, and the average stock is pretty much ripping right now. We have some other things I put on just for interest's sake, not really trading these particularly, but growth stocks just annihilated. Growth stocks are like the technology stocks, newer companies. They're really growing quickly, but they also tend to have these big run-ups and these big declines. So this is just a ratio of growth stocks versus value stocks. Value stocks are your more stable, not growing as much, and people tend to buy them based on whether they're trading at a low multiple of their earnings, something like that. But it's just interesting to see that, and we could see this from the chart basically. If you looked at the NASDAQ 100, it was just annihilated for a while, and now we're seeing this massive surge, people coming back into some of these names that they had sold off months ago. Gold was doing really well, took a big hit on the last couple days, and same with crude oil. It had been in a downtrend and kind of flat, and it's selling off again. So these are just for interest's sake. These are the ones that I'm really looking at for my overall assessment of market health. So from a price action perspective, these are all looking really good. That's how you start building uptrends, is you start taking out swing highs, you make higher swing lows, and that's an uptrend. So once that starts happening, I get very interested. So if you tracked these, we were buying through here. I said no long trades through here, and now we're buying aggressively again. So this is another thing that I go through. So the price action's great. These indicators are an assessment of how the overall health of the market is, and because again, I'm not trading the indices, I'm trading individual stocks. So I want to know, is on average are stocks healthy? Because if on average stocks are going up and on average stocks are healthy, it's going to be a lot easier to make money. This top indicator is how many stocks are above their 50-day moving average, and it's up around 79% for all U.S. stocks. 69% of the S&P 500 is in short-term uptrends or above their 50-day moving average. Not that the 50-day moving average is anything magical. It just says, yeah, these stocks are in short-term uptrends. Makes it a lot easier to make money than when most stocks are below their 50-day moving average. You have things going on like this, where you have declines. Not a good time to be buying. Volume, not super important to me at the moment. This is the daily percentage movement of the S&P 500. Uptrends are categorized or typically have very small movement. You have 0.2% upside down, minus 0.1%. This is getting much narrower than it was before. It's still not quite bull market quiet, but we haven't had any 2% drops in about 7-8 weeks. The last one was back here on December 15th. And we've been, we've had a couple close to 2% drops, but that 2% drop usually tells us to stay away for a while. In this case, we had a drop and then a flat period after it. And so we're starting to contract in volatility a bit. That's good for a bull market. Bull markets do not have massive movement from day to day. They're more complacent. So this is more typical of uptrending behavior, and it'll probably continue to contract if we continue to move up. We had a divergence. This has already been fulfilled in the sense that we had this swing high, and then we had this swing high in the advanced decline line. The advanced decline line is advancing stocks versus declining stocks on the NYSE, and it is a cumulative number. And so early on here, even though the S&P was down here, the NYSE advanced decline line had already moved above these December highs. So that's an indication often. It's not 100%, but it's quite good at telling us when the price is going to make a higher swing high, and we have fulfilled that. So we made a higher swing high on the S&P. It basically followed the advanced decline line in this case. The advanced decline line forewarned of that a bit, and so we're seeing that. So that divergence is basically fulfilled. We're still moving up. That is good. This last one on the chart is up volume versus total volume. Just tells us how much volume is in advancing stocks versus declining stocks on the day, or total volume for the day. And even though my chart doesn't quite show it here, we did have a 90% upside day a few days ago on January 31st. The data pulled from TradingView is not the official data. You can pull data off the Wall Street Journal to get the official, and this was actually just barely a 90% upside day. Just shows extremely strong buying pressure. That means 90% of the volume that occurred on that day occurred in stocks that were moving up or that finished up on the day. So a positive thing, and I look for it more near bottoms, but it's still nice to see. So these are all just up, thumbs up. So this basically just describes what I went through. Sectors on the move. Really big week for communication services, technology, and last week I had discussed these ones that were starting to make a surge. And so pretty much these top ones, I'd go to the month. Industrials in there as well, but industrials not quite as strong recently on the month and 3 month, meaning they're lagging a little bit. And these are really seem to be the ones to focus on right now: technology, communication services, consumer cyclicals, real estate, financials, basic materials dropping off a little bit. They had a tough week, and industrials you could also throw in there. So the nice thing is pretty much everything's moving well, except for our very defensive, consumer defensive, and utilities, which are stocks I'm not typically trading anyway because they don't move. They don't show up on my scanners because, they're moving up 10% a year. I'm trading stocks that are, moving 10% or 20% or 30% up in a week or two. So these really good. Does that mean you have to just trade those? Absolutely not. Right now, I'm pretty much, if I like the setup, I'm taking it. The only reason you might look at specific sectors is if you're a little pressed for time, you run your scan, there's 150 stocks on it or 200 stocks on it. You can throw in some of these sectors to reduce that list down to 50 or 75. And that just reduces your scan time a little bit. You'll be looking at the top stocks and the top sectors. And so basically I use this just to reduce scanning time when I need it, but usually I'll try to go through my whole list and find stocks I like. So what am I doing right now? I'll be adding new positions this week. I have quite a few positions out there. Some have been hitting targets very quickly, so that's a great thing. And that's one thing I forgot to mention. The last thing we look at in the market health indicators is how are the trades you're taking doing. That tells you how you're doing as a trader. If you're not getting winning trades, you don't want to hit the accelerator. You want to back off and see what's going on. Right now, things are, the trades, the watch list, if you look at the watch list, they're all pretty much just taken off. So that says, hey, these stocks I'm watching are doing good, and so I'm willing to trade them. As always, I'm also day trading, so you can check out how I do that in the price action stock day trading course, the Euro USD course. I like the day trading just because it gives me trades every day, whereas the swing trading can be, a little spotty at times where you're making some trades and then the market conditions turn poor, so you're not taking any trades. Then the conditions turn good again, so you're trading again. So there's more of this kind of in and out of the market thing, whereas day trading, you can pretty much find opportunities every day. So that is it for your market outlook for February 6th. Have a great week out there. Happy trading.